What's up, guys? Welcome back to the weekend edition of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at a couple other charts. We're going to look at where price came from, where price ended on Friday, where price is likely to head into the next week. Just coming out of NFP, non-farm payroll week. Also some testimonies that were happening last week, some Fed speaking, lots of stuff going on. So definitely looking forward to this coming week that we have. Things might be a little more calm and cool. But let's jump into the charts. Before we get started, though, don't forget to check out the links in the description below. Also, you can see the banner on the videos now that has the website where you guys can go and upgrade if you're part of the Rawstocks Discord. Premium membership includes callouts, options callouts for SPY, QQQ, Nvidia, Tesla, weekly stock picks, private member chat room, and then also a live book study that we've been doing on smart money concepts. So a lot of value there for a low price. Also a discount code right now, 50% off the first month if you use code Rawstocks for all new members. Also some other links on how you can support the channel, including a link to Top Steps, which is a futures funded trading combine and futures funded trading prop firm that you can try to pass and become a funded futures trader yourself. Right now, $49 for a 50K futures funded trading account. So let's jump into the charts. We'll start with Tesla. You can see we got the daily chart pulled up here. A couple things we want to note. Dealing range, high, swing low, right? We are in discount. We continue to expand on discount. Have not made our way back up to equilibrium. Something we want to see on the daily chart is that we have a large daily fair value gap that starts down at 184.5 and goes all the way up to 198.84. Have not traded back into it, have not even traded back up to the base of that. So we will be looking for price next week to make a move up towards that fair value gap. I'm looking for equilibrium. Could be just the base, could go a little bit deeper. Basically looking for price to then potentially attack that order block down at 160. Okay, so we're really just making a move up. And if we get that move up, ultimately looking for price to come down into that that swing order block. Okay, it's a bullish order block from that move back in April of 2023 as we went higher and failed to deliver on that bearish order block above, and where we continue to now set a series of lower lows and lower highs we have yet to break. And so I am looking for this move to complete back down to 160. But before we do that, I don't think that we're just going to dump down. I think we are going to make a run back up into that fair value gap and then maybe see that move happen first. Now, I could be wrong. We could just dump down into it. But this is where that premium long entry is going to be. Okay, if you guys are looking for your long entry or where to load up on your share positions, we're looking to take that swing order block, and then we're looking to run it back all the way up to 252.75, maybe even higher. But we are looking for us to come back up into this swing order block in the 250s. Okay, so that will be a nice trade. You could set, again, this would be really good for swings or long-term contracts. But you could, I wouldn't even set it at a 2-to-1. I'd just set the stop loss kind of at a daily close below that order block, and it ends up being like a 9-to-1 risk reward ratio on that move if you're a shareholder. Now, we do have some other targets to the downside if we take out that order block. That's why I would use a daily candle close below this order block as your stop loss, and then again targeting the previous swing order block. If you're trading it with options, you're looking at leaps, 6 months, 12 months, longer. And if you're share trading, you're entering here, and then if we go lower, again, you could take your stops right outside that low of the order block. And then you could look to reposition if we do go deeper. But minimum target would be right back up at that 200 level at a previous high. And then again, I think ultimately you'd be holding out for a rally up to 250. So let's drop down into the 4-hour chart. On the 4-hour chart, you can see that we also have a fair value gap in that same general area, 190 to 198. Okay, and we have taken sell side liquidity in the form of a new low as we saw a little bit of a bounce. We're also in a discount range here. failed to get back up to equilibrium, potentially expanding discount. Okay, from here we do have a couple small fair value gaps that are below the order block on the 4-hour chart, so we might pop down and target those, right? Whether we do that right away next week and then rally up, we could see that flush just straight down into that order block 160. That'd be quite a move, but it would be kind of the final move of what I think is going on. And then we might from there see a push up towards where we expected. But again, we might also just kind of rally up here into the fair value gap before we see that dump. I think a lot of people are scared of Tesla now, which is why I think I could see that we could pop up before we flush again, because that pop up, people are going to think, retail is going to start to think we're going to go head for new highs, because they're not paying attention to that fair value gap, right? So then we hit that fair value gap, we dump back down to that order block, basically flush out all the remaining retail bulls, and then I think we see potentially an explosive move to the upside to take that 200 level back out, and then maybe target that 250 level above. If we jump down into the 1-hour chart, 1-hour chart, again we show that new low being taken out. On the 1-hour chart, we are again at a discount range. So on all time frames, we are in a discount range. Right? On the 1 hour, we also have a fair value gap all in that same area, 193 to 199. So there's a lot of confluence of that push back up to the 190. Okay, and if you look at a fib level, if you look at the fib level here, we've traded back into optimal trade entry. Now we did get displacement through here, and that's not a great look. So we do want to see that get inverted if we're looking for a move higher. Okay, so even though we were rallying up, the fact that we displaced here is kind of a weak signal, and we can mark that off on our chart on the 1 hour time frame, is that we do want to see price push back up through there, right? If not, we're going to target a new low. If we do look at RSI, right, we did have divergence set up, and then we're kind of below the 50 level, but still kind of low, and so nothing says that we might not just push back up there and then see if we come back and test the low early next week. That looks like something that could happen because of that breakdown candle. So let's see what that would look like. Would be a move back up into there, and then potentially seeing if this low will hold, right? And then we want to see a higher high from whatever high sets there if that happens, and then a trade back down, and then something like this that's going to move us back up towards that fair value gap. Okay, it would look a little bit like a double bottom, potentially maybe even a lower, right? And then this would look like an inverted head and shoulders, and then there might be a bullish fair value gap here or an inverted fair value gap within that structure, but we'll be looking for signs of that to occur on the 1 hour time frame. Right now, the most accurate thing on the 1 hour time frame is this displacement that happened on Friday at 10 o'clock, the 10 o'clock 1 hour candle, and then we respected that. We did not trade back up through it, and so we'll be looking to see, do we invert this? If we invert this, that's a good sign that after we invert it, that you can go long and try to target 193, right? Or even just some of your fib levels on the extensions here, 184, 187, 191, and a third, 195, 196, right? And then inside that fair value gap. So let's drop down into the 15-minute. On the 15-minute, let's take off that Fibonacci level. Let's take out that fair value gap. Okay, take the RSI off. And if we take a look at our 15-minute chart, again, we got a swing order block. We got a bullish fair value gap that came back down and was respected. So there's your trade. If you were looking to take, some kind of trade on Tesla, that's the 9. We tested it at the 9:30 candle on Thursday, so that would have been a nice trade there as we traded back up into an order block. Could have been a really nice trade on Thursday. Now on Friday, on this time frame, if you do see, there was another nice short opportunity here on Tesla where we set a fair value gap. We traded back up to it, right? And then what did we target? We targeted the fair value gap in here, and we ended up hitting it and finding the support there. So that would have been a nice short on Friday if you caught that on a 15-minute time frame. But you can also see we had a lower low right there, and so that starts to show some indication that that were heading lower. Also on a 15-minute, we had a little fair value gap there. And we had a 15-minute inverted fair value gap there. So that's some of your signs that price is going to start heading lower and start targeting sell side targets. Dropping down into the 5-minute chart. 5-minute chart's the last one we're going to look at today on Tesla, and then we'll look over just a couple other tickers on the high time frames. But you can see here we have a swing order block, right? And this is Friday's price action. You can see there was a bearish fair value gap here that gets set on the 9:30 candle. We traded back up to it. There's your short entry. Okay, right at consequent encroachment. So we can use the fair value gap itself, or we could use the order block as our potential stop loss targets. Then we're going to look at a 2-to-1 at least. And our 2-to-1 is a very small move, ends up being $1.30. So that wouldn't be good. So we'd rather look at like a sell side target. And so we have a previous low here. Risk reward ends up being 6 on that trade. Could have even let your stop go a little bit higher to a previous high. It's still above a 2-to-1 trade. But let's look at just using that order block as our stop loss. And we have previous low here, right? And we also have previous low here that we hit. And then we also have on the 5-minute time frame inside of a fair value gap right here. And we can mark it off for you so you can see it very clearly. But we deliver nearly perfectly to the low of that order block. Which ends up being a nice target. I know there was a higher time frame one there as well, but if you were looking at like consequent encroachment too, if you wanted to run some runners, maybe you took some off at the previous lows here and had a runner, looking at consequent encroachment, it ends up being an 8-to-1 risk reward ratio on that Tesla trade. So using your smart money concepts to really find those great setups can be really helpful. Now let's jump over to SPY. SPY, we have the same situation I've been talking about, is we have this melt up situation. Nothing has changed. I have a couple ranges right here that we're looking at, and we took the high of the range 214.68. We have not taken the low of the range at 505. Sorry, this is 514.40 and 505.40. So looking for this trend line to hold as support. It's very aggressive, but I do think it's going to potentially hold us and melt us up to 535.64. I think we could even, we'll keep melting up and then maybe a blow off move that would take us up there and then an immediate drop. So we'll be seeing, if this ends up being an extended thing kind of through the spring season where we can often see a summertime cool off. I wouldn't be surprised if that happens, but also, again, it could be very rapid that we just kind of like, again, melting up, boom, strike up, so that may look like us kind of respecting the trend line, bam, blow off, and then down, right? And then something like that. So we'll see if we can catch that to play out, but my target is 535.64, which would be a full extension from a fib level on a daily chart. That, as you can see, came back here, had a low, high, back below equilibrium, right? We've hit our full symmetrical swing. Now we're looking for our final take profit at the 200% extension, or again, 535.64 on SPY. So same thing with QQQ that we're looking at as SPY, right? We got a bit of a melt up situation. We have our range here right around 433.68. And our range high, which we ran out on Friday at 447.28, as we just continue to set new highs. So on the Qs, basically looking for the same thing, right? We got this trend line. If it breaks, we'll be watching for these fib levels on the way down, and we'll be looking at lower time frames to find those optimal entries. But basically looking for a daily close below this trend line, and then we're looking for the range low to break at 433.92, or we'll just call it 434. Break down below that, we could be targeting additional sell side targets at 421.85. Our fib level at 416.41, right? And then we have additional sell side targets all the way down. So basically just watching for a reversal, but also could continue to get a melt up with a final target of basically 500, 498.03. If we look at Nvidia, Nvidia had a really hot trade if you were watching it on a 5-minute chart, but Nvidia took a new high. Some of you know I was calling for 1,000, or I was looking for 1,000. Called in the Discord rooms that we'd be looking to take a short at 1,000. Did not quite get there. But what you could have seen and what could have given you a killer entry and trade on Nvidia is that if you caught on the 5-minute chart that there was an inverted fair value gap right there, and there was also a 5-minute fair value gap right here. Okay, then you could have seen that both of those were signs that price was going to start going lower. If you used your fib tool to take the low to high, you can see we came back up to equilibrium, and we'd be potentially looking to target sell side targets. So where are our sell side targets? Got a sell side target there. Got a sell side target there. Sell side target there. All right, so you can see we're just running out all the sell side. Didn't quite get all the way down through it. Doesn't mean we won't finish off the job next week. And then if you were to be tracking, as you should, your high time frame targets as well. We got a daily fair value gap. Okay, let's drop back down into the 5, and you can see that here's our scalp, right, down to our 1 and down to our -2 at 922.44. So our entry back up here in the fair value gaps, right, our rundown $50 move if you just took the fib levels, right, and then you get an additional like 25 or more dollars, if you or potentially even more than that, potentially like another $50 if you're running like down into the fair value gap. But again, there's your sniper entries, right? We never get stopped. Whether you took it in the inverted fair value gap, whether you took it back in the return to that fair value gap, right? Previous high is the stop. Targeting symmetrical swing, you get a 2.89 RVR, right? Targeting the full 200% extension, you get a 4.83 RVR. Right? Sell side, you get a 5.77. Daily fair value gap, you get almost an 8 RVR with that nearly perfect entry all the way up at the top using our smart money concepts. So hopefully this video has been helpful for you guys getting prepared for the next week. We are looking again on the daily time frame of Nvidia. We are looking to see if this daily fair value gap holds. Could go a little bit deeper. If you're looking to take a long entry tomorrow to run a test back on this breakdown candle, your stop loss is going to be 860 and some change. We'll call it 859. And you'd be looking to just run it back up to test the breakout candle. If we break below this fair value gap and close a daily, we'll be looking to go short on some additional sell side targets. QQQ again, we're looking for a long entry, down near this trend line. If it breaks, and on the daily time frame, we can cut it loose. Same thing with SPY. We're watching this trend line. We're basically looking for long entries until the trend breaks. And on Tesla, again, higher time frame, we are looking for price to potentially deliver all the way down to 160, but that may or may not happen early into the week, as we might run towards 190 first and then make that run down to 160. So if we run down to 160, we're looking to load long positions 6 to 12 months out. We're looking to load up on shares if we make that run down first. If we pop back up into the 190s, we'll be looking to short the consequent encroachment or higher of that fair value gap, right? And we'll be looking to target 160 on something like 3 to 6 months options contracts. All right. Hopefully this has been helpful. Again, don't forget to smash like, subscribe, share with all your friends. Join the Rawstocks Discord. It's a community that's free. It's full of traders, options traders, stock traders, all different types of assets, some futures funded traders that are in there now as well, and also some premium sellers for options as well. So don't forget to check it out. Even if you don't want to join premium, it's free to join, access a lot of the education, a lot of the content, and definitely the community for the support and the conversation. So hopefully we'll see you in there, and good luck on your trading this week.